Good morning, everyone. Happy Sunday, Easter for a lot of people, and we have about 105 tickers to go through, less than last time. So let's jump in. I usually start with the indices, a little blurb about that, but look for the video for tonight on the indices. That's like 4 minutes long. It's more important than all these videos put together. As far as which tickers you want to watch, they're all in alphabetical order. So if you're only interested in 5 stocks, you can just fast forward to the 5 stocks you want. But it might be fun to watch some other people's ideas too. I ran through the list. There are some interesting tickers in there. Okay, starting with the first one, the SPY. Hi, good morning. We have a group growing here live. The weekly has not changed. The target that we had, the target zone, is the upper end of that blue line you see, so nothing has changed there. The week was green. Less green was the QQQ. It was still green and elevated. I haven't expressed the target with the Qs, but you can, if the other one has to go 10%, this one may go 10 plus or minus. And the one mystery one is the IWM, which had a very green week, and now it is in a breakout from its recent history. So now, in order to find a prior fade level, you have to go 2 years back. You do have a lot going into 215, but now the target has become 250. Yes, we go from looking here to the target up in that zone. If I look left, that would make an all-time high. I would not be surprised if they go for it this week or next. So that is a possibility. I wouldn't buy a call and hold it, but if you want to, it's not bad money. The market is extremely bullish, and we'll talk more about that in the strategy video. All right, having said that, let's just look into every individual situation. We'll start with the prior king of stocks, Apple. No longer the king of stocks. I don't know why I enjoy saying that, because I said Tim Cook would be the one to bury it, and he's certainly doing a good job at that. So Apple has been in the hands of the sellers. The bears are in complete control of the Apple stock. The bulls can take it back with one headline, but that headline is not coming. So theoretically, every rally is to be sold until that changes. And the big breakdown was back then and at 180. You can give or take $1 there. So the target should be somewhere down in the low 160s, high 150s. And if we do go there, it might go lower. So it's kind of hard to envision Apple down there while the markets are breaking out. So I wouldn't buy a put. But if I'm long, I don't add here. If I want to go long, I would only nibble here. Leave room to add later. Technically, you have 2 areas to look for this week immediately is 174 versus 170. Those are the round numbers. There are other lines like 176 and, of course, the one they bounced off of here. Those are 2 milestones that the bears and bulls would need to tackle. Fundamentally, it's not bad. It's just not good, and everybody else is passing it. Airbnb. This here is not an obvious entry point, although the bulls are in complete control. Lower lows, higher lows, higher highs. The trend is very positive. In order to get some sort of an opinion, you would have to zoom out. Is this an all-time high? No. All right, so now we're looking at area from 2022 where it fell apart several times. So here's the statement. If I'm not long, I don't get started here. If I'm a momentum trader, like I'm going to hold it for a few days or a few hours, maybe I can eke out a profit. But if I'm an investor, I would want it closer to 150, if possible, closer to 142. 147, super strong support from this year. Any dip below 147 becomes very interesting for me, at least a starting point. Now, if I can't help myself and I must own it right here, right now, I wouldn't. I would sell puts maybe, or a credit put spread to put me in that zone down there. You have 38 days until the next earnings report. The ABT, that's Abbott Labs. It fell from point A to point B, and it recovered just about half. I think that's half right there. That was not a starting point, and the market showed. So now let's see if the market shows us some support around 111 or 112, because that's what I'm looking for. You don't want it to curl back down along this red line and fail at holding this support zone. So far, you're stuck. 115 area sellers and pretty strong support below. I wouldn't add to longs. I wouldn't start longs here. I would be patient to see what they want to do next. Adobe, it's fallen into support, but the problem is that now a lot of moving averages that are important for machine trading are above us. I think losing 560 was a big deal. Losing 550 was a bigger deal, and now it has those two lines above. So as long as Adobe is below 550, 540, 50, and 60, it's in the hands of the sellers, and it could get below 480, especially if the markets revert slower. You see these boxes, volume, means that the rally was too fast. There's no transactions to help you with support. So if you lose 480, I can't tell you how far down these three boxes they will go, because there haven't been a lot of transactions. That's a weak spot in the chart, which means if I'm long, I'm definitely not adding, and I'm not buying calls unless I'm trading from point A to point B, like intra-week. Like I see, oh, okay, they're going to break out from this one and get to that one. That kind of logic, maybe you can deal with calls. And for that, hop into the live room. ADM, Archer Daniels. This one keeps coming back, and speaking of comebacks, it has come back down this. The easy work has been done, not that it was easy. You're going to hear me say that a lot. This here is not an obvious point of entry. I mean, it could go higher. How about you wait until they hit 62 or something like that? Depends on if you're investing or not. I think it's easier for it to get to 60 or 61 than it is to get to 65. And earnings are in 23 days. I don't know a lot about the fundamentals. AES. Man, every stock looks like it's a moonshot these days. I mean, here's a stock that has rallied 21% in just a few days. And that's about halfway, if not a little bit more, of that one. So I would imagine 18.5, there are sellers hiding between that and 19.5. So how fast are you? What are your intentions? I would not add longs without real reason. Like if you have a reason, the charts aren't everything. Just make sure you're realistic with that reason. AMD, I'm very worried. Fundamentally, AMD is a solid company under solid management. It kind of hit the line we drew for it not too long ago. You see that neckline we drew, kind of arc? Well, that area is now important to recover. That's the so-called neckline that got us down to here. So if the bulls are not at 192 or higher, they're at risk of revisiting, going lower. Headlines matter, especially when you rally to high heaven because of them. So AMD last May rallied with everybody. Let's see, where was that May headline? Right here. That was the NVIDIA headline. And it's gone to here without a commensurate move in the P&L. So if I switch to NVIDIA from here, right around here, 3 months later, they actually delivered on their P&L promises. So this changed completely as the stock did this. With AMD, it hasn't. So AMD needs to come out and say, okay, we have a headline like NVIDIA, we're going to double our sales or whatever. Or they need to show growth better than this one for me to trust the value up here. Otherwise, this one is too expensive from a valuation perspective. Technically, I already commented on that. So you can go long, but you're hoping, and you can go short, also you're hoping. Or you can just sit it out and wait out to see what they're going to do next. Go above 190 or 192, or lose this guy from last week. If you lose last week's low, you're going to go to 161. AMGN, nice rally. Now I wonder if it's going into prior fails and how much you're going to think about it. So this week, if they can hold, say, 281 and have them come back and take out the Friday pre-open high, maybe they come up to 296. So you're going to have to ask yourself, am I trading or investing? Right? Okay, so then you make decisions based on that. For whatever reason, they need to defend 267. I'm not saying that that's in danger, but if they do fall down to 272, 267 must hold. Otherwise, woof, the conversation gets pretty ugly. So it has support, scattered from here to 267, but it better hold. Upside potential, you tell me. There is a catalyst right above here. Technically, they might want to come back to take out a little bit more of that. So maybe a credit put spread. I wouldn't hold calls. Amazon has a battle in front of it. Which one? If I zoom back and I go to weekly, you'll see what right there. So it's a short coming soon to a theater near you. I can short against these two peaks and stop out if I'm wrong. The upside target is a little bit higher, that red thing we pointed out from the breach of, when the market spiked. But I'm not so sure they can hold, they can finish it. And if they do finish it, it's a short. So are you trading? You might have a little bit more upside. Are you investing? This is not a good starting point from a charts perspective. If you must own some shares right here and you want to own 100, I would pick up 10 tops, 12 maybe. Because I'm confident, I'm very confident I'll be able to buy Amazon cheaper this year as a stock investment. And if I don't, and I missed out on a 5% of upside, if you're a long-term investor, no one should be upset at that. All right, APA, pretty interesting battle right here. If they take out this 35, not even 35, well, let's say 35, 35.2, there's a fight zone. You might get a heck of a lot more upside. So if somebody's long, I don't blame them. I kind of see what they see. They avoided this scenario. Whoops. They avoided this downside scenario. Well, not all of it. And now they're in a breakout. I would say 35.2 is a target. I would not. I'm leery of starting longs into 35.2. That's my statement there. So be careful. Dips into 32 or 33 would be better entry points. This is more of a trading comment than an investment comment. ARKG, forgot what the G, growth. Okay, so is Tesla in there? You got to figure it out. I would not go long into that one candle. That candle is the neckline. So I'm going to say there's a bunch of sellers of ARKG into 29.80. Be careful. And in fact, if they don't take that out, if they don't go to 30 and 30.2 soon, they might end up at 26 in the next couple of months. You heard that, right? So this is more of a swing trading comment. I think there are sellers above, and I don't think they can take that out. So be careful on that growth part. ARKG, sorry. RK is a little bit better. I forgot who's in it. There might be a couple of Bitcoin companies in it, so be careful. Coin, I think, is in there. Tesla is in there. I'm going from memory from a while back. So know your ETF. Now what I can tell you is there's higher lows and lower highs. Something is coming. A dip back down towards 48.50 to hold support. We'll see. It does have a lot of support, so that's a good news. And it doesn't take much to break out of 51.40. But I'm not sure I just want to hold calls because then I'll be guessing. So if I wanted to buy calls, I would sell puts to finance them or put spreads. ASPN, I don't know much about the company itself, but technically you do have an opportunity, but it looks pretty difficult. A couple of weeks ago, it had actually within the last couple of months, there's been a lot of fails at the same spot. So I'm thinking 18.2 to 18.5 is going to be pretty difficult to break through, but once they do, it'll be a nice catalyst. You're probably more qualified than, okay, whoa, what the heck is this? All right, so that's about as much time I was want to give this stock. The moon, 30 plus, if they can take that out, was fourth. With force, I don't know if they can. I honestly don't. I would, if you force me, I'd buy it cheap, but I'm not going to. If you know the company, you're a better decision maker on it than me. Boeing, so the long that I've shared is working still fine. A credit put spread was the best way to go long, or a sold put. I'm still in a sold put out in time. It's winning. I'm also in a sold call, actually 2 of them. So I have 2 sold calls to every sold put. So I'm happy where it is. I wouldn't hold calls for Boeing, and I wouldn't short it just because I think the news is bad. Technically, the stock already told us where it's stuck, 198 and 172. This spot right there and this spot right here. So we can put a circle around these 2 things. And what do we do now? We wait. This is a headline stock, and the headline can cut both ways. So it can be a relief headline that the FAA approves blah, 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 and then the 737 MAX problems are finally behind it, and it spikes $20, $30, $40, or another altercation with the tech and the FAA. So we'll see. To me, it's nothing to do here. I don't know if I would get excited going long into that much resistance above. The company's fine. It has no competition. Having 2 companies doing one thing in the whole world is not really competition. They have all the sales they want. Even when you hear, oh, they lost the contract, they are backed up on sales, so on orders. So they have all the sales they want. Biogen, descending wedge. This thing cannot find a floor. So Biogen is in deep trouble if they don't get back above 220, kind of like that Apple comment. Okay, I don't know. I don't think the company is bad or anything, but this descending wedge will yield a pretty big sharp rally, just like all the other ones that have failed and lower lows. So you could get to 24. They need to do it ASAP, otherwise the base is a little bit lower than here. There is a gap open all the way to 200 on the left. That alone is not reason to hold a put, but it's something to mention. They're selling rallies, so if the rally comes, they're probably going to try to sell it off. If somebody is jumping in long, I don't blame you. It's a decent long, like a sell a credit put spread, buy a call spread if there is no earnings, 24 days. It's not a bad long for a swing trade. I'm going to add it to my watch list just one more time. It was on there and I kicked it out. BMY, look at this. It's probably following this red path perfectly, and this red path is just me copying a prior behavior and moving it forward. So so far, if I move this extended a little bit wider, you can see how it's following it perfectly. So I'm not going to do that. I can see it myself. You can see it. So what I'm saying is they don't pop out of here. They're probably going to drop down a little bit more, pop one more time, and drop down a little bit more. Whoops. So I would not start calls going into a prior fail. Wait for a dip to buy those calls so it can curl back up and take that out if you're bullish. Wait for a dip. Oh, look, they dipped on Friday. One long, look at that beautiful drop from here to here in no time. Almost 3% in a minute. In an hour. That is pretty weird. All right, Bitcoin. When you submit a ticker on Bitcoin, please don't just submit BTC. BTC is the market cap of Bitcoin. You won't have the price chart. It would look the same, but the values would be weird. It saves me a whole lot of trouble to figure out what ticker it is. Okay, so you know my story with Bitcoin. I'm looking at Ether now, not Bitcoin, because Bitcoin hit an all-time high and it's waiting to see if Ether can hit an all-time high. Why? Ether, the coin for Ethereum, is the second largest crypto, and it has not hit an all-time high. It has about $1,000 to go there. So anyway, the 4,900 I think was the high, 4,800, 4,900 in Ether. I think Bitcoin will hang out here until Ether tries to run at it one more time. Technically, that last fail recently is a trigger to make another all-time high. Would I buy new coins as a trade? Yes. As an investment, you might have better entries. Now, Bitcoin should go to 200 and 300 and 400,000 over time, just like gold would. I don't know if this is where I would load up. I loaded up at the bottom. Otherwise, you should adopt a strategy of adding a little bit at a time. If you want to start now with a few $100, that's not a big deal. And downside scenario, 64,000 in the next 3 months. That would be a tradable dip, not an investable dip. Blackstone. All right. They're trying to break out again from a multiple times failing at 134. If they do it, they go to 139 and 140. This market is insane. They might help them do that. For me, I'd say bye-bye, and I would wait. In fact, if you twist my arm, I would sell a call spread in there. But there's earnings coming soon. The banks report first, and this one is going to report in about 18 days, so I wouldn't touch it from that perspective. Caterpillar, never short it. Never short Caterpillar. They do well all the time. In fact, I'm going to delete that. And so even if the market the world is shrinking as far as growth, they still need Caterpillar equipment. And I learned a lesson a long time ago. If it gives me an obvious entry point from the long side, I'll take it. Otherwise, I never short Caterpillar. I have before, even in an iron condor, and it's always a hassle. Look at this stock. I'm not sure that it deserves it. Like if I look at the P&L, I better see a huge ramp. I don't. You see the BS of Wall Street? Why is the stock going parabolic when the P&L is flat as a pancake? I just don't understand. Year over year, you can see some growth, but that's the pandemic. So that's not really what's going on. This is a quarterly, flat as a pancake. So there is some growth maybe, but definitely not NVIDIA-like stock growth. It does break hard like this one, and it gives you an entry. So whenever you see Caterpillar down more than 20%, then come and ask me about it, not when it's all done. So I'm curious to ask the person who asked me for the sticker, what do you want? Are you looking for a place to short? I would not short it. That's the simple answer. Are you looking to go long now? Where's the rush? Those two questions. This is how I would answer it. CCJ, I shorted it couple of times successfully. It wasn't easy. It was a struggle, but I won both times. When I say shorted it, I just bought simple puts and sold credit call spread. I may have sold calls in this one actually. All right, 45 is a point of failure and a catalyst. That arrow still exists. So if I were to do anything for you today, I would just move these two things to the right. Whoops. Why? Because they've yet succeeded in taking them out, but if they do, they will end up at 48. Best done if you let them dip. Okay, so you can say, okay, this one was this arrow, and then after that, they might want to dip. And you can actually copy this one here because that opportunity is also there. I'm not going to do that. I'm going to say that this one, I can extend it. It is support, and if they lose it, they test secondary support, and if they lose that and fail, they test tertiary support. But they bounced hard here, so I would imagine there's a lot of sellers above, a lot of buyer below, not much to do with calls and puts, other than time a swing from here to here, for example. So look for entry points on a dip. Console Energy, good company. I would accumulate over time. The next time it dips to 77, probably be a starter position, and if it loses 75, it goes to the high to mid 60s. That would be a buy into this company for a long-term investment. They pay a small dividend and the P&L is pristine. Maybe they get bought out. CHWY, I don't like what I'm seeing. I would not start a long. I'd like from a trading perspective, I could start a position if I wanted to have a portfolio. I mean, the P&L is pretty good. It does grow a little bit. It's not hurting, but the stock can't help but fall, like it's going out of business. I don't understand what Wall Street has against it, but this to me looks like a base for a higher future. Like I'm talking as an old school investment. So how do I tackle this? I buy shares, half the position, and then I forget about it. And if it gets cut to under $10, I'll add the second half, and then I would have a good entry point for the long term. As an investor, like old school. Trading wise, it's not a good idea to go long when a stock has just lost a neckline. So it would be a speculative investment in calls. Selling puts would work. Selling a put spread would work. Buying calls and hoping for the best may or may not work. So be careful what method you choose. Costco, finally, a break from greatness. This is another one where I cannot accept the ramp of this. The company is beautiful. Management is solid. The business model is great. but the stock has gone parabolic. Over what? Why is this ramp so steep? And if you look at it from a weekly basis, it's ridiculous. When the growth is solid at best, there was nothing exceptional. So if you take this stock, this parabolic, what do you leave for NVIDIA? It would loop circles then. You run out of space. So what am I saying? Costco may end up here in the 680 to 690 zone, and if the markets crash in the next year, it will end up below 650. So if I bought up here the stock, against my logic, this is not where I would add. I would add if it goes to 650, because if I bought up here, I made my bet and I have to lie in it, and that's how I would handle that one. There's a big battle. There's a lot of sellers above 745 and a lot of buyers below 710. If it loses 710, I'm going to give you an immediate target. $670 or lower. So I'm just going to give it from here on down, and I'm going to draw it very conservatively to not offend anyone. Okay, so this zone here needs to be held. It's actually a little crooked. I don't like to do slanted head and shoulders or head and shoulder-ish, because that just gives weird vibes as far as, so I like them to be straight. I trust levels more than trends. So there's no fake out in levels. You lose the level, you lost the level. There's no interpretation. Like, in other words, which 2 points would you connect on a trend? These two, then the breakdown would be here. You connect these two, then the breakdown would be here. Versus a level. They've bounced on 710 hard for months. You lose 710, you're going for a ride. So this might be a little too low. We'll bring it up a little bit. All right, you have buyers, you do have support, but the technicals say rallies are to be sold, buy the dips and see if you can avoid that from a trading perspective. From an investment perspective, I wouldn't touch it yet. CRSP, this is what happened to the CRISPR right up here. We said once you lose the head and shoulders, they lost theirs. So this is that prior line in Costco equivalent. And then they went down to here, which would have been this height. So 12, 24 would be somewhere down in this zone. So they're almost at their target. I usually would have given it from here to here. Let me see, how much is that? 7. Yeah, perfect. So my target would have been in this zone. They exceeded a little bit. Look left, it's falling into support. I wouldn't buy puts here. I wouldn't get out of my longs if I'm not out yet. This is where it should find support. If I'm in a swing trade investor, I would be looking to get long inside this zone because there are buyers in size. In fact, I don't know the company, so I will force myself to do some more homework on it to see if it's tradable. I'm not about pharma, so I would have to ask you. If you know about it, reach out to me. Okay. Can you do a credit call spread on Costco? I think I did, and it was a struggle. You can, but you have to time it right. I would actually do an iron condor. I don't know if I will do a credit call spread. Chevron, I'm short Exxon and struggling. So last week, I believe on Friday or Thursday, another beautiful headline from Goldman Sachs. I don't know how long the SEC will let them do this. They come out and they call for $100 oil every so many years, and they profit tremendously off of their words, and they're allowed to do it. I wish I can do that. I wish you can do that. You come out and say, hey, I think Apple is a good long, and everybody takes it Apple because you have a big enough platform where everybody believes you. Meanwhile, you're dumping your Apple stock. I just don't understand how that happens, but it is what it is. So oil 100 headline, stock rallies. I think even if oil hits 100, those two stocks will be falling tremendously, because if we hit 100 oil, we have an inflation problem that Powell cannot deny. He will have to raise rates, not cut rates, raise rates. I'm saying it with complete confidence. I know I sound like a lunatic, but I promise you, if oil is over $100, they can't hide the inflation problem. We do have an inflation problem. They're hiding it right now. You can't hide it if oil is 100. You would need morons for citizens to believe that message. Okay, so dips are buying opportunities technically in this stock that just broke out. My short on Exxon, and I'm not short Chevron, but is a credit call spread. It can still work out. It's under a little fire. I'll update you on what I'm doing with mine. Chevron, for some reason, has been underperforming Exxon, but this is a little breakout. So dips into 155 should find support. Deere, like Caterpillar, don't short it. Even if the world is shrinking, there's growth in that company because it's agriculture as well. So there's always use and need for their equipment. At least it's not at an all-time high. So I can understand that chart. The sales are not growing. They're arguably shrinking. No, that's a quarterly thing. Well, I don't know what's going on, but I can tell you they're trying to break out. Now, if I look left, this looks like a breakout. But if I look left, this looks like a prior fail. I would dare to sell a call spread in this one. I said don't short it, but as a trade because of the chart. So if you ask me if you're buying a call, I wouldn't. If you want to go long, buy dips into 400. The closer the better. If you're looking to short it, maybe you can afford to do a credit call spread if the earnings are not soon enough. And they are for 47 days, so it's doable. Disney, look at that. Identical charts. You can't even tell I'm switching. Okay, Disney broke out from 113, it looks like. Let's zoom out. Oh my gosh. Jeez Louise. Short Disney. All right, so at some point I drew these letter and they're inside the letter. Let's look at the P&L. What the fudge? Yeah, that is a idea to short. And again, when I say short, I never mean sell the stock outright. And I would avoid earnings. So the way to treat this is, number one, close your trades that you're long with. If I'm going to short something, I get out of my longs. I can tell you there's a seller throughout 132. If you look left, that was a massive disappointment. Anybody buying calls up here, I think they're putting themselves in danger. Buy puts, maybe. Buy it for a couple of days and see how it behaves. Put spread, like a put diagonal, put calendar would be the way I would trade it. I would book profits if I was a trader. I would not start positions if I was an investor. If anything, it'll be just nominal, tiny one. I would trim my profits if I'm already long. That's the kind of thinking. If I own shares, I would sell covered calls. DigitalOcean, I think is headed towards 36 or 35. That's the only thing I'm going to tell you. It has support there, and it has resistance above, but I think it's easier to drift lower. Duke Energy, I don't know exactly what part of the energy. I want to say they're coal. Natural gas. Nat gas. I like nat gas, but it's pretty crazy. So Duke looks like a breakout with a target of about 100. But if you look left, you have sellers around 97.50. Weigh the pros and cons. Maybe buy the dip into 95.50 if you're trying to get a great call, great entry. Plenty of support below now. So if you're long, you have the upper hand. But you do have a problem coming up very shortly. Okay, Alpha at one point was going through the roof. I would imagine that if they ran out of steam, they're going to give back, let's say, half. And if they do, that's 160, 155. What am I talking about? I'm talking about this whole rally. Mathematically, machines will look for it. So I would expect a dip towards the zone down here at some point. Without any catalyst. No earnings until 53 days from now, so it can go either way, but looks like lower might be easier. Okay. They have good products, somebody's saying in the room. That's not a reason to own the shares. All right, target is 74 on Etsy. So I took a long in Etsy this week or last week while in the live room. And I didn't even have time to write it up and send it out, I don't think. But I would have taken a long on this dip. It beeped at me. Once it crossed this support zone, it beeped. And I said, all right, let's take a long against this support. And I sold some puts or put spreads. And then this immediately happened. So on the next dip, I could go long Etsy before the earnings for a swing trade opportunity. This one could be headed to 73 plus. So if you're fast enough, maybe you can enter a long on a dip. Like if we have a hiccup this week, take a long and see if it can curl up. I chose a credit put spread, so I don't make money past what I collect up front. Not the type of long everybody loves, where they want to make 400%. I'll take my 15-20% and I'm happy. EVGO. So you can tell how much I love EV, right? But at least this one has a P&L. All right. You have support at 230. You have resistance at 280. I don't know what you're trying to do. If you're trying to invest in the company long term, just buy a few shares, leave room to double your shares, and forget about it. If you're a trader, you're guessing from here. Lower or higher, it's a guess. You're going to have to, you're a slave of you're at risk from headlines in this industry, is what I meant to say. FCX. Good company, was a buy, and now it's not. It's definitely not a long. Debit put spread, I don't know how long. Oh, that was an old earnings comment, looks like. So you tell me. If you think that this is a good entry point, I think you need better skills in charts. Now, one can say, oh, they just broke out from 44 and they're going to 55, perhaps. But you're going into a massive fail, so at least wait for a dip, because you sound like a trader if you're saying that, and traders would love to buy the dip. They just broke out, and you can buy calls and hope for the best. You can buy shares and hope for the best, or you can buy them on a dip and get them for a discount. They are buying dips, and this stock is broken out. And this is another one where the P&L is flat as a pancake, and the stock is trying to do something extraordinary, so caution with that. 4. Okay. They lost support of 68 and 69 and 73. I think as long as they're below 73, the bears are in charge. It's middle of the part from here to here. So from that perspective, this is a normal dip. If you're an investor and you own shares, you don't do anything. If you're looking to own shares, you buy like a small part, half maybe, 30%, in case they fall down to here. So figure out, are you trading or investing? Trading, you have support for a bounce, but you also have tremendous resistance. So do with that what you need. All right, and with that, we have the end of the first video.